A recession could appear far off, given the low jobless rate and the thriving economy. However, that prosperity has caused soaring inflation and driven up the cost of essential goods like oil. The Federal Reserve is increasing interest rates to counter rising prices, but some investors are dubious about whether the move would prevent a recession in the United States. What's the best strategy to invest in if the economy does experience a recession? Make sure to stay tuned until the end to find out. Hey guys, welcome back to Economy Expert. In today's video, we'll be discussing the recession and where to invest to profit yourself during it. You might not expect the finest investments during a recession. Many investors make the error of being more conservative when the ideal long-term plan of action is to become more aggressive and increase exposure to assets that may give potentially higher returns. The justification is straightforward. After equities decline, investors are paying less for the potential future growth of those companies. Everyone is familiar with the adage, buy low, sell high, but few are actually able to put it into reality because fear is so frequently standing in the way of good decisions during a market downturn. According to M. Tyler Ozan, CFP, Principal and Senior Financial Advisor with Probity Advisors, once we know that we are in an economic recession, the equity investment market forces are probably closer to the bottom than they are to the top in valuations. And many times those markets are already well on their way into a rebound. To put it another way, he argues, once we realize we're in a recession, it's too late to run for safety. You should have done it before. Instead, a recession is an opportunity to get ready for the market recovery that will follow. Of all things, a recession is more than simply a market downturn. It's also a sluggish economy that might result in unemployment and other financial hardships. How can you strike a balance between those outcomes? 10 investments to think about making in a recession are listed below. Number 10. Stock funds. An excellent way to invest during a recession is in a stock fund, whether it be a mutual or an ETF. Investors bet less on any one stock than they do on the recovery of the economy and an improvement in the market mood, and funds often have lower volatility than portfolios of a few stocks. And if you can handle the short-term volatility, an equity fund offers the possibility of substantial long-term gains. Investors who don't want the inconvenience and risks of buying individual stocks can choose well-diversified funds. An intelligent option is an index fund based on the Standard & Poor's 500, a well-balanced index made up of a large number of America's top corporations. You thereby own a portion of the market as a whole, attempting to predict the winners. According to Brooke V. May, CFP, managing partner of Evans May Wealth in the Indianapolis region, investors with a well-balanced portfolio have to remember that the market has always come back from downturns. Number 9. Dividend stocks. You might want to include some dividend stocks in your portfolio if you want it to be less volatile, a little. Your portfolio will move less when you invest in high-quality dividend stocks because they vary less than other stock types, growth stocks for instance. Additionally, they may provide a cash dividend to guarantee that you have some income whilst you wait for the market to change. Not confident in your ability to choose your own dividend stocks? Purchase a dividend stock fund to reap the benefits of diversification's lower risk levels while still receiving a respectable dividend return. Additionally, if you purchase shares at a discount, the total yield will be higher. Number 8. Real estate. For a number of reasons, real estate can be a desirable investment during a recession. First, you might be able to purchase items at a lower cost than in times of a robust economy. The value of your real estate could then increase as the economy grows and consumers have more money to spend. Second, during a recession, while rates are probably considerably lower than they would be otherwise, you could be able to secure a mortgage at a much better rate. A desirable mortgage payment can be fixed for years or even decades, guaranteeing that you will still have it even if interest rates later rise. Many investors have recently obtained a 30-year mortgage with a rate of less than 3%. Real estate is a desirable inflation hedge since they are repaying the mortgage with cheaper dollars when inflation grows now and in the future. Number 7. High-yield savings account. Cash? Yes. Given that most recessions don't last very long, cash might be a decent investment in the near run. You have a lot of possibilities with cash. Utilize it if necessary, such as if you lose your job during a recession, and it enables you to make opportunistic investment if somehow the stock market unexpectedly declines or you subsequently find the ideal home. But keeping too much cash has its drawbacks. Your savings may be eroded by inflation, and it's unlikely that you'll earn enough interest to make up the difference. Therefore, deposit your money in a high-yield online savings account and use it to your advantage. Number 6. Seek out core sector stocks. You might be tempted to give up on stocks during a recession, but experts advise against doing so. There are frequently a few industries that push on and offer investors stable profits even when the rest of the market is in trouble. So if you want to use stocks to hedge against a recession, consider investing in the healthcare, utility and consumer goods industries. Regardless of the situation in the economy, people will continue to spend money on food, power, household goods and healthcare. As a result, these stocks typically perform well during bust and underperform during booms. Number 5. Purchase precious metal investments. During market lulls, precious metals like gold or silver frequently do well. However, because there is typically a rise in demand for certain commodities during recessions, their prices typically increase as well. There are numerous ways to invest in precious metals. Purchasing coins or bars from a vendor or a coin dealer is the simplest option. Although this is not the same as buying a security, it's still an option. ETFs should be a focus if you're more interested in purchasing precious metal equities. These funds are assemblages of investments made in a specific sector, in this case, the market for precious metals. If you're saving expressly for retirement, you could also buy a gold IRA. Number 4. Buy good stocks that have suddenly gone cheap. Most equities decline during a bear market that is accompanied by a recession. The best course of action is to see this as an opportunity. According to Warren Buffett, it's wise to invest in strong basic businesses anytime they are being sold for a reasonable price. In recessions and weak markets, it's especially wise to keep an eye out for such businesses. Number 3. Take advantage of opportunities in fixed income. Think of fixed income as an asset class that ranges from cash in money market funds to terms of 30 years, referred to as bonds in the chart's shorthand. You can occasionally shorten or extend maturities in a timely manner. The current state of affairs is unclear. Although the Fed is determined to raise rates significantly, the behavior of many rates and other signs indicate a recession, which might prompt the Fed to change its mind and lead rates to decline. Number 2. Take advantage of tax losses. Many people have sold their negative balance stock portfolios over the years. One benefit of holding equities through a portfolio as opposed to an index is that you can do this. For instance, I typically sell stocks or portions of stock positions that are losing money around the end of the year. After 31 days, I can usually buy it back without paying any further fees. I do make an effort to space out my tax loss sales, so I'm not doing them at the same time as everyone else. The genius of this tactic is that it turns your losses into gains. A tax loss might be used to offset gains if you have a stock that you're afraid to sell due to embedded capital gains. You may use up to $3,000 to offset ordinary income if there are no gains to offset. A tax loss bank is also something that you can retain forever. Number 1. Invest in yourself. During a recession, if you lose your job and source of money, you might recover by investing in yourself. You might return to school to learn new things or hone existing ones so you can land a better job. If you're concerned that your employment status might deteriorate at some point, paying off debt is another choice. During an economic crisis, you'll feel less anxious if you have less money to spend on bills. However, just don't listen to us. Make sure that you do your own research and analysis and then invest accordingly. And that's all for today. Thanks for watching. Let us know your thoughts on these investment tips in the comment section. If you enjoyed it, please like, share and subscribe to our channel Economy Expert for more such amazing content. See you in the next video.